The key STI index rose 0.13% to end the day at 3,017. Among the blue chip stocks that help give a lift to the STI, they include Singtel, which gained 0.3%, Capital Land rising 0.7%, DBS Group advancing 0.2%. Casino Group, Genting Singapore, made noticeable gains as well. The stock rose 1.8% after it announced that it will jointly develop an integrated resort in Jeju Islands, Korea. Brokerage Nomura says its research note that the Resorts World Jeju project would mark Genting's entry into the rapidly expanding tourism industry in Korea. And for more about the markets, Linda Hong, Singapore markets this week.
Actually, if you look at the Singapore market, short interest has spiked. So I actually think it's looking near-term oversold right here. One thing we should look for globally will be next Tuesday and comments from the Fed chairman, the new Fed chairman. I think it's likely that she has a lot of room to basically remain very accommodative with stimulus. And overall, that's good news for the Singapore market.
And speaking of this new US Fed chairwoman who will be making her first appearance before Congress, how do you think that would actually specifically affect Singapore markets?
Well, a big concern for the market and the markets in the whole region has been, the pulling back of U.S. stimulus. We've had in the U.S. two relatively weak jobs reports recently, and I think that gives a lot of cover for the new chairwoman, Ms. Yellen, to basically argue for keeping stimulus pretty accommodative.
So what do you think are some of the other headlines or headwinds that you think will affect Singapore markets?
Yeah, overall, probably one of the very important set of events we have coming is now earnings. We're just starting getting the earnings season. We actually believe that earnings for the whole market, the earnings estimates for 2014, will likely have to come down a bit post-earnings season. So I think it'll be very, very much an earnings-driven period going forward.
And Singapore-listed companies are in the midst of announcing earnings. How do you think is the quality of earnings of Singapore-listed companies this latest quarter?
Again, I think for certain sectors, earnings for this year look a bit high, and I think results coming out will probably lead analysts to have to bring those down. I think sectors at risk of downgrades are places such as the industrials, and then also sort of the agricultural commodity traders and also the palm oil names.
Out of the various countries in Asia, how does the earnings of Singapore-listed companies compare to the other countries in Asia, ASEAN?
The good news is that last year Singapore didn't look that good relative in terms of earnings growth in the region because Singapore had negative earnings last year, or negative growth. This year, Singapore is actually looking much better in terms of the relative earnings growth. So right now, we expect Singapore, to register north of 10% earnings growth this year, and that compares pretty favorably, actually, relative to the region.
So, Vincent, what do you think are some of your recommendations for Singapore companies?
Yeah, I think the place to look right now is in banks and also property. The banks have actually been underperforming year to date, and so I think it's still I like the long-term outlook for banks and their exposure in a rising interest rate environment longer term. But then also, if you go to property, I think we're at the stage where negativity is quite severe across the market in terms of sentiment for property. I think just about everyone now feels that there's a problem with the property market. So I think it's actually a good time to start looking for value because a lot of the stocks in that space have really been hammered down.
Singapore shoppers and investors heading across the causeway may have some reason to